Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, the 21st of October, 2021. This is episode number 2099. 2099. We're going to hit 2100 tomorrow. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thank you for the sound check. This morning, really a slight risk off to mixed market. Hard to say so far. The S&P is off 11 points, 24 basis points. The Dow 94 points, 26 basis points. The Nasdaq's off 41 points. The Nasdaq's relatively weaker than the S&P overall, given where we are, where we've been this week. And the Russell's off 4.1 points or 18 basis points. Europe slightly off. Asia was off. Crude has pushed through the $82 mark and is pulling back a little bit. Crude continues to be on a tear, and that's where that stands. Bitcoin hovering around 65,000. Ether has pushed through the 4,000, holding 4250-ish, 4241 currently on the futures. And that's where we stand. What is the market paying attention to? Still, we're getting a ton of earnings, right? So this morning pre-market, we got AT&T, Valero, Dow, Nucor, American Airlines, SAP, ABB, Southwest Airlines, and many others. There's just a ton of them here. After the close, we get Whirlpool and Intel. Again, at this point, I'm filtering out $3 billion in estimated revenue or higher. So there may be companies you'll hear about elsewhere that won't show up on this list. This is not intended to be a comprehensive list, just a view of what's out there. And you can see there's a lot going on in the earnings reporting segment right now. Again, earnings and inflation, global supply chain issues are front and center. Today we have several numbers coming through, the key of which is we did get initial claims. Initial claims were better, 290,000 versus 300,000 expected. The lower the better. Philly Fed came in at 23.8, lower than the 25-point expectation. Consumer confidence out of the Eurozone at 10, expecting -5, and existing home sales expected at 6.09 million. Later this evening, Great Britain gets the GfK consumer confidence for October, and Japan gets its inflation rate. That's what's key for today. Currently, the S&P has traded 144,000. Like yesterday, the volume has significantly dropped off, and it's a balanced market. We have another balanced profile, just like we did yesterday. We're balancing around the 45.15. Yesterday, we were balancing around 4,500. We keep migrating the point of control higher. We're currently trading below the mid. Actually, we're testing the mid from below currently, the mid for the session in VWAP. And overall, we've spent 100% of the volume has traded below yesterday's settlement, and that's where we stand. But we're within a stone's throw from the all-time highs in the S&P. The all-time highs in RTH is 45, 34, 75, 34, 75, and the Globex high is 40 and a quarter, which is about 2-3 rotations away. So that's where we stand. Yeah, if your screen is blurry and you're on YouTube, click on the little cog at the bottom right corner and set it to 1080p. That's dictated by your resolution is set by YouTube based on your connectivity and bandwidth. If you're on the EdgeClear website watching the Trader Bite, you can click on the bottom right corner and go to YouTube and adjust the settings there. So that's where that is. What did we expect yesterday? Yesterday, the expectation is for a choppy open. I talked about this quite a bit. Expected a pretty choppy open, and was looking for the market to push higher into 1975 and then ultimately get to 25.26. Here's what we got yesterday in our review segment. Pretty tight. We can see multiple days. This is RTH only. We can see 3 days on the screen. This is an indication, kind of a rough indication, given a 4-tick Renko. A Renko bar is not drawn unless enough movement is present. And given a 4-tick Renko, we're seeing 3 days on one screen. If you recall, on the more volatile days, you would have the whole day cover the screen plus some. I'd have to scroll to see where the open is. This is an indication of what is typical to a rallying market, which is the reduction in volatility, the reduction in range as a result, the reduction in volume. All of those kind of go hand in hand. And so yesterday we opened up in a gap. We gapped up about 3 points, 3.5 points above the prior day's high. The prior day's high is at 12.25. We opened at 15.75. And then we just did this kind of sideways dance. This is an open auction. We finally push to the upside. So the goal is to find longs. So again, this is a gap and go trade. Gap and go, gap and go. Okay, so when we have a gap out of range, the plan, the setup is to see if the market becomes responsive into the gap to fill it. Yesterday's gap had a relatively high probability. I think it was somewhere around 70% historically that it would it would get back and touch the prior close. It didn't do that. So in a gap and go situation, if it chops around and it doesn't become responsive, but instead the impulse is to the positive side, to the buy side, then you don't look for shorts, period. That could save you a lot of money, that piece of advice there. And so look for longs against day references. And so the goal is to just trade off of mid, VWAP, wherever you can find it. Right here, as the ES was pushing near highs, the NASDAQ was trading near lows down here and was ready to go neutral on the day, and it dragged the S&P down. The S&P did not go neutral, and it held sideways. Yesterday was a normal, and what's called a normal day, and it's completely, with a small range extension beyond the initial balance. In other words, most of the business was done in the first hour, and the rest of the time was spent sideways. We ended up with somewhat of a balanced profile. We finished inside of the initial balance. Yesterday was quite nondescript. It's a pretty meh kind of a trade. This morning, carrying that into this morning, by the way, the delta yesterday, completely flat, just completely sideways, just snaking around zero the entire day. Carrying that into the current session, let's clear this up. So this is the new session open. As soon as the market opens, it tests down, goes back through the open, extends. This is the main rotation down, extends the rotation down, consolidates. The expectation is it would push a little lower, given that this was a trending push down. I wouldn't call it an impulse. The expectation is it would push lower, but really what's happening here, let's pull up the overnight profile only. What's happening here is that it is just holding steady against the overnight point of control. We are below yesterday's point of control. This is what was tested right after the open. So overall, we're still in a bull market. We're still one time framing up. We're still in an uptrend on the weekly and the daily. And it looks like it is just consolidating or resting. We are very close, as I mentioned, we're very close to the 34.75 RTH, all-time high, or regular trading hours, all-time high, or RTH, ATH. And then there's the ETH, ATH, the extended trading hours, all-time high at 45.40, just above. Okay, and so that's where we stand this morning as we're coming in, looking at the market generated references. The mid is right here, the VWAP's right there, and it's tangling in there. We're opening in range of yesterday. Yesterday's value area is valid. The value area of yesterday is 45.30 to 45.22 and a quarter, 45.30 to 22 and a quarter, with the point of control at 25. I'm suspecting that as it pushes back in there, that it's likely to be choppy in yesterday's range. There's some odd action going on in the market, I have to say, because I'm seeing it pushing through when it's showing exhaustion. So um, there are some indications in the auction process as prices is going through its process of discovering prices higher or lower. There are some indications that, hey, I'm exhausted, yet it continues to kind of squeeze higher and higher and higher, and it's kind of an odd thing because I see some indications that things are slowing down, kind of like yesterday. I see this as a market that has run quite a bit, with multiple gaps below. You know, 3 gaps in a row, very rare occurrence. Very rare occurrence. You would expect a gap, impulse, and rest day, or gap, impulse, and then a continuation, not another gap, but a continuation higher and a rest day. And what we have here is basically 3 gaps in 4 sessions, 3 gaps in 4 sessions, and we're still maintaining these high prices. So very unusual behavior, and it kind of throws off the process a little bit. Okay, so not to cut you guys short here, but I want to make this quick. I want to remind you that today I'm hosting, through Convergent Trading, I'm hosting Anthony Crudele of Futures Radio Show, and he does several streams for traders. He's going to be on for a trader spotlight. We're going to have him on today to talk about the common traits of successful traders, and the goal here is to pick out, on his experience, interviewing many traders as part of his show, and to talk about what are people doing, what are a lot of his interviewees doing to maintain their edge, to maintain their success. This is taking place midday as opposed to post session. Join us at 1 o'clock. The link is pinned to the YouTube live chat. It is in the YouTube description, video description. If you scroll down, if you're on YouTube, the link is right there. Go to ct.pro/Crudele-event. It's basically a panel discussion, not a presentation, just an interview. Should be about 45 minutes. I think it'll be interesting. Let's take a look at what's expected for today. So here we have the point of control shifting up, and of course shifting up from down here. And this morning we're opening up with a point of control that's a little bit lower, but of course the volume is not quite there. And so it is likely to shift up with the market in the RTH. I'm expecting day session volume to reflect overnight volume, and we've been off about 30%, 20 to 30%, and the expectation is that's going to continue coming into the session today. 150,000 contracts. This morning, I'm looking for it to be responsive back to the overnight point of control. We have a lot of consolidation here that we're breaking to the high side on. I'm expecting a response, and then I'm looking for it to migrate back to yesterday's point of control, which was 25.50. 25.50. Take out the overnight high right here, and the overnight high is 27.75. That gives us the overnight stat. Consolidate in here, and then eventually break through and start challenging the 34.75. The 34.75. So the 34.75 is the RTH high. That'll be the key number to challenge, and then beyond there we have the 40 quarter above. We are so close to all-time highs that if the market was not supporting these prices, we wouldn't be here. So we're approaching what we would call a weak high, and so the expectation is it would push through, poke through, and come back in at the end of the session. So bullish perspective, despite the fact that the market seems mixed to weak this morning. The secondary, an open auction that pushes higher, gets into the yesterday's point of control and is unable and gives us an impulse back to the overnight point of control. This creates better opportunity. This is likely to drive us back to the 00, to the century figure, which again creates better opportunity. Let's reduce our expectations in terms of ranges. The ranges are collapsing. The ranges are collapsing, and it could go as low as 95 here. The next stock zone down. The ranges are collapsing, therefore our targets need to come in a little bit, somewhere around 5.5 points, and our stops are likely needing to come in a little bit as well. Okay, so those are the two key scenarios. Again, we're opening in range, in value of yesterday's trade, so we're expecting a check of the entire value range. Okay, Edge Pro X is written in Java. Good luck, everyone. Don't forget to sign up for the Credelli event. Again, go to ct.pro/Credelli-event. I'll catch you in there today at 1 p.m. Today at 1 p.m. Go and register now. And even if you can't attend, register so that the recording can be sent to you. Good luck.